Howdy, folks, and welcome to the Daily Coin. My name is Rory, and today is Friday, October the 14th, 2016. And it is with great honor and distinct pleasure that I welcome back to the show Mr. Bryan Slusarchuck, who is the president and director of K92 Mining. And you can find all the information as well as contact with Bryan at k92mining.com, and they are listed on the Toronto Ventures Exchange under the symbol KNT. Bryan, welcome back to the Daily Coin.
Rory, thanks a lot for having me on.
Well, I'm certainly glad that you're here, and wanted to start with this world of ZERP that we live in, and with the Fed still having their hands tied or sitting on their hands and not raising rates. How much longer, Bryan, can this ZERP world continue before the system moves into hyperinflation or really starts to just kind of break apart?
Well, it's really interesting, Rory, to see the Fed's hands tied as they are right now. But what I look at on a global basis, we've got negative interest rates in many parts of the world. We've got very, very low interest rates in the other parts of the world. And when I look at the 2008 financial crisis, the Fed had a lot of ammunition to prolong the inevitable by banging rates down and taking on that really aggressive monetary position. At the same time, the big governments around the world took very aggressive fiscal steps and flooded economies globally with cheap money. I think that we're starting to see inflation creep up. It's creeping up quietly. I think we all know that the baskets of consumer goods used to measure inflation probably understate the case. And even with a Fed rate hike, you're still going to be in a real environment of negative interest rates because of the fact that inflation is moving higher. And I think that there's more and more concern out there about inflation. But at the same time, when you have entities like Deutsche Bank being mentioned in the same breath as Lehman Brothers, you start to realize just how hand-tied the central bankers around the world are going to be moving forward when they try to avert a financial crisis, whether it comes through rapid inflation that they're having a tough time controlling, or simply how do they flood more money into the system when they've already foolhardily injected trillions of dollars of fiscal stimulus and given us this essentially zero rate interest environment around the world monetarily.
It's out of control, and I just don't see how the rubber bands, chewing gum, and Band-Aids are going to be able to hold it together very much longer. I mean, it just makes no sense at all to me. But, I mean, it's still working. People are still accepting U.S. dollars. People are still accepting Canadian dollars, which is where you're at. And as long as that happens, then the charade continues.
It absolutely, you hit the nail on the head, Rory. And, gold for thousands of years has represented a store of wealth. It's represented real value. It's represented, if you will, in our modern terms, it's represented money. Gold is money. Yet, over the past couple of decades, we've seen some esteemed central bankers take a contrary view. But it's only a matter of time before these fiat currencies around the world start getting seen for what they are, which is increasingly worthless promises to pay in the future without real underlying value. As a Canadian, I'm ashamed to say that nationally we declared that we no longer own any gold, but the central bankers and politicians have told us don't worry. We own $50 billion of U.S. foreign reserves. In other words, we have U.S. dollars, a fiat currency, propping up propping up our own fiat currency without any true, real value underlying this. And when people start to realize what's happening, I just think it doesn't end well.
I would agree. I mean, when you have a promise that's backing up a promise that is tied to yet another promise, it's like, well, wait a minute. Is there anything
Exactly.
tangible in here?
Exactly. And what's really ironic and I think scary for us in the West is that as we've turned our back on gold to some degree, you've got the Chinese, Russians, Indians gobbling up as much gold as they can get their hands on. And every day we're reminded in the news about the geopolitical shift, the financial shift that's happening in the world, the recent inclusion of China into the FDR currency basket. The Chinese currency now has a greater weighting than the British pound, than the Japanese yen within those FDRs. And to me, that just signifies a dramatic shift in financial clout worldwide. And for us in the West, we better wake up soon and see what's happening before it's too late financially.
Yeah, I would agree with that wholeheartedly. I mean, as you pointed out, not only has the renminbi been added to the SDR basket of currencies, but the weighting against the other four is pretty dramatic in the way that it jumped ahead of the British pound sterling as well as the Japanese yen, and the only two that have a stronger weighting are the euro and the US dollar. And for it to go to zero to that position is very telling. And this is the first monetary change at that level, at the global level, in 30 years. So to me, that's another signal that something major is on the horizon, and it's already here. We just haven't arrived at that point yet.
Absolutely. And when people realize the significance of that alone, I think that it's going to cause uncertainty in the West. At the same time, I think that the central bankers and the big governments around the world scarily don't know what the next move is. They realize that they need to fight inflation and fight hyperinflation, and they have certain tools to do that. But what will the impact be on moving the global environment out of this zero interest rate or negative interest rate environment? What types of impact will that have on global financial markets, on global real estate markets, etc.? The thing here is, Rory, I don't think the central bankers know what the next steps are. And as far as what the plan is next, I think they're as clueless as anybody out there. And it's going to be downright frightening if this situation escalates.
Couldn't agree more. I mean, it's just, we've got to get on solid footing from this point, or at some point in the not too distant future. Otherwise, we're just going to be pushed aside and nothing more than a footnote in history. And Bryan, I want to kind of change gears, but it's along the same lines as what we're talking about. And as you're well aware, I'm sure, the U.S. election is just 3 weeks away. And Trump has already conducted business in gold and stated that he believes that the dollar is in serious trouble. And not to mention his more recent statements about the Federal Reserve and how it's nothing more than a political machine working against the people. And if he is elected, how would you see him? How would you see gold reacting to his election or Hillary's election? I mean, do you see either one of them being more positive? Or will gold be up? Will it be down, sideways? Will it matter?
I think that in the short term, if Trump is elected, you would likely see a bump in the price of gold, essentially related to the fact that he's not an establishment candidate. He represents some uncertainty in different parts of the world, and you would see a bump there. But remember, the issue is bigger than that. It's bigger than who gets elected. It's the fact that almost every politician of every stripe out there in the Western world, whether they're Republican, Democrat, here in Canada, whether they're conservative, liberal, or NDP, all of these politicians are continuing to seemingly advocate a policy of big tax and big spend. And the fiscal part of this whole equation is getting really overlooked. In Canada, not too long ago, we had a couple of prominent politicians state that deficits just don't matter anymore. And that's the type of mindset that we're seeing in North America, that we're seeing throughout Europe, Western Europe, and the former East in Europe. We're seeing this mentality that fiscally, a deficit spending that's ingrained and entrenched is a-okay. We've moved in Canada from being in a position of surplus to a position of running big deficits. And this is a multi-party problem here. The last two governments from two different stripes have been running deficits. And I think that speaks to the pressure on these governments to deliver all of these gold-plated social benefits that we've all become accustomed to in the West, but also not wanting to pay for these. So I see an increasing trend of taxation around the world, and I see an increasing trend of government spending, and government will become bigger and bigger and bigger throughout the Western world until enough people say, hold on, this doesn't make sense, and it's not sustainable. And I think that general macro environment is what bodes very well for gold.
Things are going to just continue to deteriorate, and we're going to find ourselves just in deeper and deeper hot water. And I want to get to the good news. And
Sure.
I was just reading earlier this morning, Bryan, your press release from October the 13th, which was yesterday, and it looks like you guys are have just announced that you have 108,000 ounces equivalent of gold that you're going to be pulling out of the ground for the next 9 years. And on top of that, you're looking at approximately 3 times that amount or more in silver. And I want you to speak to that. And copper, it looks like you guys have quite a bit of copper in the ground also. So it looks like, just from reading the little bit that I was able to read, that you guys are setting on the proverbial gold mine. And what's going on with this Cora deposit?
Sure. It's exciting, Rory. In the last 10 days, we've had two big announcements. Number one, we just announced that we are now in gold production at the Iruma-Fimpa deposit. And the Iruma-Fimpa deposit, we are targeting to produce 52,000 ounces in 2017 at a very low cost, targeting $650 per ounce. But just a few days post that announcement, about getting into production, we further announced that we have completed the PEA, the assessment on a second deposit known as Cora. Cora is only 700 meters away from Irma-Fimpa. It will utilize the same processing facility, and these numbers at Cora that are being targeted are superb. The results of the study included an all-in sustaining cost of $619 an ounce. That's all in. The actual cash costs per ounce of gold equivalent are in the neighborhood of $550. We'll produce at Cora 108,000 ounces per year. It will generate positive cash flow over 9 years of $558 million. That represents an internal rate of return of 113% and an NPV on this project using a 5% discount rate of $415 million US. Now, what's also very exciting about this is that the study, the assessment estimates that we can bring Cora into production in the first quarter of 2018, and that the initial capital costs at Cora to bring this second deposit online are less than $14 million. And that's less than the cash that we have on hand right now. So what the company has been able to accomplish in a very short period of time, we've got Irma-Fimpa into gold production ahead of schedule and on budget. And now the same team is working to bring on the Cora deposit. And that gives real visibility, real clarity on not only what we're doing for the next 12 months, but how we're going to target a dramatic expansion in the production profile. And these numbers, in terms of those costs, in terms of the IRR, these are in the best quartile of the industry. It can be done. It's estimated according to the study, the assessment, for less than $14 million. So we're just in very good shape here. You know, we came to trade publicly on May 25th. Since that time, we've announced we've gone into production. We've shown the market how we're putting a second deposit into production. Because of strong institutional demand, even though we were fully financed when we started to trade on May 25th, we've raised an additional $26 million, and that's allowing us to accelerate the production growth plans and accelerate the resource expansion plans. So it's a great job the technical team on site has done. This is a team that's done it again and again all over the world, and they just proved, contrary to a lot of experiences in the mining industry, that a project can come in on budget, ahead of schedule, and that companies can indeed over-deliver and under-promise. And that's what we're hoping to do on Cora, the second deposit, Rory.
I mean, when I was reading that and I read that, like you pointed out, that the all-in production cost was going to be under $14 million, it was just like, you got to be kidding me. I mean, I literally couldn't believe the number that I was reading. And I went back and I read it again, and it's like, oh my God. I mean, that's nothing in the mining industry. I mean, as far as from where you were to where you're going to be, and that small of an investment to get there, it's just mind-boggling to me. It really is. I mean, you guys must be just on cloud 9 up there, or cloud K92.
Yeah, that's right. That's well put, Rory. And the fact is that the company has never been in better shape. We've just made 2 transformational announcements via the startup of gold production and guidance on this second deposit coming online. But because gold has pulled back here in the short term, the share price is down nicely from its highs, and it's giving people another opportunity that thought they may have missed the boat, so to speak, to enter here after doing their due diligence at a price that's more attractive than it was a couple of months ago when we weren't nearly as far as advanced fundamentally.
Yeah, just since you and I have last spoken, I mean, you guys have made huge strides. I mean, we spoke at the just after you guys went public at the end of May, and now here we are, just a handful of months later, and the this announcement alone, I mean, it's incredible. And I want to ask you, we talked about the SDR and the Chinese renminbi being added to that, to the SDR basket of currencies. And with these changes, Bryan, along with Brexit and the other nation states within the Eurozone that are threatening to leave, I mean, do you see a time in our future when gold will be returned to a monetary status for the people?
I think there's a great shot of that. What's always tough to tell is when timing will occur. What my belief, though, is that as more and more people desire that and want it to occur and believe it will occur, we're going to see a rising price of gold bullion, and that bodes really well for us. Every time historically that gold bullion has been in a bull market, the price of gold equities like K92 have outperformed the actual metal. I think, Rory, that we're right on the cusp of some major transforming changes in a global environment. You see what's happening in Europe. You see great dissatisfaction with the Eurozone, and that dissatisfaction is coming from leading countries within the Eurozone, the Brexit being a great example of that. You see dissatisfaction around the globe with the central bank actions, with ongoing fiscal stimulus gone haywire. I think that gold is going to become more and more prominent. And I think what people in North America don't necessarily realize is that in places like China, it's already becoming more and more prominent every day. That is the trend. We're just a little bit late to catch on here. But once we do, I think that more and more people are going to be screaming for a return to some sort of monetary condition that's supported by gold and not just worthless promises.
Exactly. Well said. Very well said. And you guys have at the Cora and probably the other projects as well, a significant copper deposit there as well. And right now, copper's not doing real well, Bryan. But from your perspective, doesn't it seem like that China, with the new Silk Road project, the One Belt One Road project, being it's full steam ahead at this point, and this is not to mention any of the massive ongoing solar projects. Wouldn't it make sense that copper will be in high demand in the coming years, or how do you see that playing out?
I agree with copper becoming increasingly in demand. I think for K92, we're very fortuitous that the Irumafimpa deposit that we've put into production first is a gold deposit. There's very little of anything else in that deposit other than gold. There's very little copper. There is a little bit. There's very little silver. Irumafimpa is a gold deposit, and that's what's come online. And I'm very bullish on gold in the near term. Now, when we bring Cora online, and as I mentioned, that's targeted for Q1 2018, you start to see a bigger copper footprint, bigger silver footprint. Cora is expected over a 9-year life to treat 3.2 million tons at 7.1 grams per ton gold, 25 grams per ton silver, 1.7% copper. So very strong gold, silver, and copper numbers. And I think that will coincide nicely with a rebound for copper pricing and copper demand. And copper right now has performed poorly, but it looks like it's made a base. And by the time we start producing copper in 2018, I'm hopeful that you're going to see prices much higher. Now, remember, we based our economics when we talk about a $415 million net present value on Cora alone. We're basing it off of today's prices. We're basing it off of a presumption that copper won't go any higher. But if it does, and I think that it will, for the reasons you mentioned and more, I think it will go higher. And if so, that's gravy for the economics of the Cora project for us.
Sounds great, and I think as far as the timing of that, I think you're probably about right. I mean, I know that China has, or I believe that they have fairly massive deposits of or holdings of copper, and those are going to they'll have to dwindle down over the course of the next year or so. If not, I mean, it may take a little bit longer, but they'll be looking to re up their stockpile at some point. And when you guys come online in another, that's about another year and a half, another 18 months. I mean, that should be right in line with everything, and something's got to give. So may as well be given to you guys.
Yeah. Well, we just feel, blessed for the fact that during the phase that we're in now, we are all gold essentially. But over time, we'll still have gold as the primary metal from our deposits. But by 2018, we'll also have a nice mix of copper and silver. And I think you're bang on as to timing.
And last question, and I'll let you get back to your afternoon. I presume with all this gold and silver that you deal with every day, that you are in fact a gold bug, silver bug, and how do you feel about holding physical, holding paper? What do you think about physical precious metals?
I think there's a big place in people's portfolio for physical gold holdings. The one thing that I advocate often is that gold mining equities that are actually producing the physical gold outperform the physical gold itself in times of gold bull markets. And I think that fits into a strategy of looking at K9 too. At the same time, I believe in physical gold, and I believe that it should be a core part of somebody's portfolio. The one thing that I always caution is that make sure if you're buying physical gold, you're buying physical gold. You're not buying a paper representation of it. And I see some of these structured finance products coming out of Wall Street, etc., as paper gold versus the real physical. So when you look at physical as a part of your portfolio strategy, make sure it's real physical and that it's backed up by gold, not just paper derivatives of some sort.
Exactly. If you don't hold it, you don't own it.
Exactly.
That's my philosophy. Well, Bryan, I certainly appreciate all your time this afternoon, and we have been speaking with Bryan Slusarchuck, who is the president and director at K92 Mining, and you can find all of their information over at k92mining.com, as well as their listing under the symbol KNT on the Toronto Ventures Exchange. Bryan, thank you once again for all your time today.
Thank you, Rory.